The SOFI stock is up 24% because they posted some massive earnings and investors went crazy. In today's video, guys, we're going to go over that earnings report that the SOFI stock just posted. I'm going to give you my thoughts on it, and then I'm also going to break down the chart and give you an idea of where I see the SOFI stock price headed from here. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin. I am your host. In today's video, we are going to take a look at the SOFI stock. I have made many videos on this company where I talk about what they do and overall their inner workings. So if you want to see me talk about that, I will post those videos right here. In today's video, guys, we are just going to talk about their earnings report. The stock is going absolutely insane right now. It's up 24% on the day because they posted a huge earnings report and investors loved what they saw. My job and what I'm planning on doing in this video, guys, is giving you my thoughts if that rally is justified. I want to look and see if the SOFI stock should be up 24% today, if the earnings were really that good. And then I also want to break down the chart and give you an idea of where I see the SOFI stock price headed from here. If it's a buy at these levels, if we should be looking to trade it, or if we should be holding it for the long term, and what I'm currently doing with SOFI. Real quick, guys, before we get started, if you want to see more videos like this, subscribe to the channel. If you're new around here, come over and join us at the Patreon if you want to get all of our trade setups. And Day One Squad, I love you so much. Thank you for your support. But let's go ahead and jump in, guys. First thing we're going to look at. All right, guys, so this is their earnings report. So as you can see, when it comes to the GAAP EPS for Q2, they posted negative 12 cents, which was a beat by 1 cent. So not a big beat on their actual EPS. It was on their revenue, guys. Take a look at revenue. $356.09 million for the quarter, which was up 50.1% year over year and a beat by about 11.62 million. So massive revenue growth there, guys. 50% year over year is huge. We've talked about how SOFI has done a very good job at growing revenue year over year and quarter over quarter very consistently. I want to mention how, guys, they could have easily revise their earnings downwards, right? With the horrible economic conditions, it would have been honestly not even surprising if they would have issued a downward revision and missed on their earnings report. But I think that's why investors are so happy to see this, and that's why the stock is up 24%. There's a couple of things that we want to talk about. First thing, guys, their guidance moving forward was another reason the stock is up, and we'll take a look at that. But let's look at some of their member growth, their product growth, Galileo, stuff like that. They put on 450,000 account or members quarter over quarter. That's huge, guys. The second highest quarter for new members, and it grew 69% year over year. They're totaling 4.3 million. They were projecting to do 3 million at the end of 2021. And they blew it out of the water by about 460,000 accounts. And we talked about that in way old videos, right? We were projecting that they were going to beat on member growth. So fantastic member growth there, guys. When it comes to products, same thing, guys. Second highest quarter for new products. 700,000 quarter over quarter is what they added. So they're not only getting more members, guys, but they're getting their members to use products, more products, right? So you had 450,000 members, but you had 702,000 products. So you're getting a lot of members that are multi-product members, which is fantastic. The more members using more products, the better, right? As you can see, guys, 79% year over year, absolutely huge right there at 6.5 million when it comes to actual products being sold or what they've issued. Galileo accounts, guys, we've talked about how Galileo is a very strong suit for them. One of their best aspects of the business, in my opinion. 117 million when it comes to actual Galileo accounts, and that grew 48% year over year. Their growth is, narrowing, right? But it's really challenging to maintain such massive growth year over year when you're getting up there at 117 million accounts. So last thing, guys, before we jump into some of my issues with what I'm seeing and then the actual chart. If you want to see me, give you an idea of where I think the stock prices go and stick around till the end, I'll go over where you should be looking to buy, take profit, things like that. When it comes to guidance, guys, for the second half of 2022, you can see they're projecting to do 830 to 835 million of adjusted net revenue, which would be up 49 to 50% year over year. So again, first quarter, 50% revenue growth, and they're projecting all the way to Q4 to do 50% revenue growth year over year. That's massive. Investors are pumped about that. They, like I said, could have easily came out and revised that downwards. Now, that's not even including the student loan moratorium, guys. They've counted that out, right? And if that comes back into play sooner than expected, that would be a big revenue bump for these guys. It would add, upwards of $2 billion to their actual revenue. That student loan refinancing would be in huge demand if that stopped sooner than later. So keep that in mind. Obviously, you can't count on it, but if it happens, that would be great. When it comes to EBITDA, guys, 75 to 80 million, which is they're looking at about 9 to 10% when it comes to the margin. Now, we've talked about in other videos, my biggest concern with SoFi, guys, really, bad on their net income and on their free cash flow. When you jump down to the actual full year 2022 guidance compared to 2021, 2020, and 2019, you can see revenue growth is huge, very, very consistent. EBITDA is narrowing as well, guys, but EBITDA isn't net income, right? It's earning before interest, tax, depreciation, and amortization. So you can't look at it like they're profitable yet because they're not, and I really want to see them start getting money to their bottom end. That's my biggest concern, right? I know other investors are saying you can't look at it like they're a bank. They grow faster than traditional banks, and I will give you that. But guys, they're a bank, right? I mean, at the end of the day, they're a bank. And I will admit before anybody that most people don't know how to analyze the inner workings and the complexity of banking. And if they say they do, they're probably lying, guys. Banking is so insanely complex. There's so much that goes into it, and I don't know how to analyze it. I do know how to, say, okay, this is what I'm looking for in a company before I invest into it. I want to see this, 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 and this, right? But I don't know how to look at a bank. However, guys, SoFi they're a new company, right? They're a SPAC. They're growing insanely fast. They're cutting that EBITDA. They're narrowing those losses, but I got to see them get to the bottom end. And the biggest concern that I have, guys, is right here. Look at that cash burn, guys. Their free cash flow hasn't been positive since 2018. They've got almost they do have $3.4 billion in negative free cash flow in their trailing 12 months. So they've got to get that cash burn under control. You can only operate at such a bad burn for so long before you're in trouble. So I would like to see them do things to cut that down. Now, the other thing, guys, is they had a big acquisition in the last year or so. So that helped revenue growth substantially. Are they going to continue to be able to make acquisitions that are big enough and substantial enough to move the needle to continue to maintain that revenue growth into 2023, 2024, and so on? I don't know. We'll just have to see. So I guess what I'm getting at here, guys, is my biggest concern, bad free cash flow burn. When you look at their balance sheet, also, guys, they're issuing more shares. They went from 828.6 million to 915.7 million. So those are some of my concerns. I really like the revenue growth, love the product, love the member growth, the product growth, the Galileo growth, love it all, right? But I hate the net income, and I hate the free cash flow, and I hate that they're issuing more shares, especially when the stock price is down at such lower prices, right? So what I'm doing is I'm just kind of sitting on the sideline, especially with such a massive rally of 24% today. If we jump over and look at the chart, they're actually up 28% as of right now, guys. The chart looks actually pretty good, right? If you're going to buy in, these are your lower risk areas down here. In the last video, guys, we talked about, we had the big bullish butterfly. We were right around here. So we had that first low, that reaction, and we were waiting for that second confirmation low. Once we got that confirmation low, I said in the last video, you can take that trade very strategically, setting your stop loss under the lowest low, and then you're off to the races. If you are looking to buy it for the long term and you're just wanting to buy it and hold it, I would wait to see what happens here if you don't currently own it. If you're dollar cost averaging into it because you fully believe in the company, I have no problem with that. Do your thing, right? Like I said, I'm waiting on the sidelines. I didn't take the trade here, but it was a beautiful trade setup, guys. Look at this bullish dragon right here. If we drop down to the 4 hour, textbook bullish dragon. You have your head, your neck, your first foot, your hump, your second foot, and your tail. Once you break that trend line, you trade the tail. Now, guys, look at what happened on the 4-hour. You had textbook hidden bullish divergence from this low to this low, and then you caught the reaction, got back above the 200-day moving or 200-hour moving average on the 4-hour, 204-hour moving average. If we jump back to the daily though, guys, look at your hidden bearish divergence right here. From this high to this high, you had a high on your relative strength, and then you made a higher high when this price made a lower high. So that's implying a continuation to the downside, but it got violated because of earnings, and now you're rallying. So that's something you want to keep in mind, guys. You just reached the highest level of relative strength on the daily since clear back here in November of 2021. So that was clear back here, guys, at the peak, the third high when you tested the that inflection zone at the top before dumping. So your relative strength index is showing immense amount of strength. When it comes to the actual MACD, you started to lose positive momentum. Obviously, the rally today, you started building positive momentum. So you're at a really crucial area here, guys. Typically, when you've got a dragon pattern, you trade it from the right when you break the tail, and then your targets are like the 618. You could typically take it to the 786, but guys, you're right there at a level that you're typically going to see a reaction. So I think what you've got to be looking for here, right, because you've got your double bottom. If you just look at it like a double bottom, you are now kind of breaking that neckline, right? And your measured move, if you take your measured move from the low to the previous, low from back here in March, pretty much use that as your neckline, and you take your, measured move, it puts you right up there about that 200-day moving average, as well as the high from the dragon, so the top of the head. So guys, that could be your target, right, if you got in back here, but I would look at it much more like a big bullish harmonic like this, because then if you take your fibs and we jump over to the weekly, on the last video, we talked about the textbook bullish hammer on the first low. You're building fresh positive momentum. You're headed back up to neutral, the highest level of relative strength that you've seen on the weekly since November. You're out of the bearish control zone. So in reality, guys, you're looking good, right? From the weekly perspective, if you take your fibs and you go from the all-time high, the top of the structure, to the all-time low, 236, 382, 50%, 618. They're all confluent with pretty major levels. So as of right now, guys, what I would be looking out for is, now that you've broke that neckline right there at like that $7.74 level, which was that previous low, if it can hold above that level, your next target, $10.10, right? After that, you break $10.10, almost 14 bucks, $13.94. But if you can't hold $7.74, I'll see you back at $4.82. So that's what it is, right, guys? I mean, you've got a big structure. It's going to take a lot of time for this to play out. I mean, this is like a 2-year-old structure. So you could absolutely see it, pull back from here. So you kind of pull back, you back test that level, you run to the next level, you break it, you back test it, right, before heading to higher prices. Overall, guys, if I was taking this trade, I would wait until you back test $7.74, because now that you broke it, market participants want to see that level is going to continuously hold. A level that was once support, now it is resistance, needs to act as support again. So that's what I would do, guys. I currently do not own it. I'm currently sitting on the sidelines. I missed the trade, even though it's set up perfectly exactly what I wanted. I would have loved to take it back here, once it broke. And honestly, once it made that second confirmation low, you're in business, right? But overall, the chart looks great. I hate the net income, hate the free cash flow. Let me know what you think down in the comments, guys. I'd love to hear from you. Come over and join us at the Patreon if you want to see more videos like this, and always do your own research. This video is for entertainment purposes only. I love you guys. I'll see you in the next one. Peace.